Your S corporation cannot take a home office deduction, but here's what it can do. Are you an S corporation owner who works from home and pays business expenses from your personal account? You may personally pay for internet service, office supplies, business mileage, or expenses related to the area of your home that you use for your corporation's business. Now, many business owners assume they can simply claim those expenses on their individual federal income tax return. But here's the problem. Your S corporation doesn't have a home. An S corporation is a separate legal entity, and when you perform services for your S corporation, you are generally treated as an employee of that corporation. As a result, you generally cannot claim unreimbursed home office expenses on your individual federal income tax return. So, if you're personally paying legitimate business expenses and never seeking reimbursement from your corporation, you may be missing a valuable tax benefit. Now, does that mean an S corporation owner receives no tax benefit from using part of the home for the business? Not necessarily. One possible solution is a properly established and administered accountable plan. I'm Lisa Marie Odeja, CPA, EA, and a former federal government auditor. And at Pinnacle Financial Services, we help real estate investors and profitable business owners implement proactive tax strategies that are properly documented and defensible. So let's talk about how an accountable plan works and why it's often misunderstood. An accountable plan is an employer reimbursement arrangement, and it allows a business to reimburse an employee, including a S corporation shareholder employee, for qualifying business expenses that the employee initially paid personally. So, when the accountable plan requirements are satisfied, the reimbursement is generally deductible by the corporation, excluded from the employee's taxable wages, and not subject to the federal income tax withholding or payroll taxes. However, simply calling something a reimbursement does not automatically make it tax-free. Generally, an accountable plan has 3 basic requirements. First, the expense must have a legitimate business purpose. Second, the employee must adequately substantiate the expense within a reasonable period. And third, any excess reimbursement must be returned. Now, if those requirements aren't met, some or all of the reimbursement may instead be treated as taxable wages. So, how does this apply to a home office? Let's say you own an S corporation and regularly and exclusively use a dedicated area of your home for the corporation's business, and you personally pay expenses such as rent or mortgage, utilities, insurance, and maintenance. Here's the important part. Because the S corporation does not own your home, you generally cannot claim the home office deduction directly on Form 8829 in the same manner as a sole proprietor filing Schedule C. Instead, the corporation may be able to reimburse you for the properly calculated business use portion of certain eligible home expenses under an accountable plan. For example, if your qualifying office represents 10% of your home, the corporation may be able to reimburse the allocable business use portion of certain eligible expenses subject to the applicable tax rules. Now, does every room used for work qualify? No. The fact that you occasionally work from home does not automatically make part of your home a qualifying business space. The area generally must be used regularly and exclusively for business, and the facts should support the business use. So, what should the shareholder employee document? This is where many accountable plans fall apart. The corporation should not simply transfer a round number payment to the shareholder and call it a reimbursement. The reimbursement should be supported by documentation showing what was paid, how the business portion was calculated, and why the expense qualifies. So, although the IRS does not require a document called Expense Reimbursement Report, I prefer using one because it creates a clear, consistent, and a defensible record of what was submitted, reviewed, approved, and reimbursed. The corporation should then properly record the reimbursement in its books and pay it from the business account. Just as important, don't wait until tax season to recalculate everything from memory. A regular reimbursement process, such as monthly or quarterly, is generally much easier to administer, document, and defend. Accountable plans also aren't limited to home office expenses. So, depending on the facts and circumstances, they may also reimburse other qualifying business expenses that an employee initially paid personally. There are also several common mistakes to avoid, and these include things such as reimbursing estimated expenses without adequate documentation, or paying flat monthly allowances without substantiation, or including personal expenses as business expenses, or attempting to create an accountable plan after the fact instead of following one throughout the year. Remember, an accountable plan does not convert personal expenses into deductible business expenses. The expenses must still qualify under the tax law and be properly documented. So, what's the takeaway? An S corporation generally cannot claim a home office deduction the same way a sole proprietor can. However, when a shareholder employee personally pays qualifying business expenses, a properly structured and properly administered accountable plan may allow the corporation to reimburse those expenses while preserving the intended tax treatment. But like many tax strategies, success depends on proper documentation, proper calculation, and consistent administration. Because real tax strategy isn't just about what you can take, it's what you can defend. Now, if you found value in this video, please be sure to like, comment, subscribe, and share this video with another real estate investor or profitable business owner who may need to hear this information. And to learn more about working with Pinnacle Financial Services, simply visit the link below in the description or scan the QR code on your screen. Thanks for watching, and until next time, I'll see you in the next video.